Okay, we're going to get started, ladies and gentlemen. Just let me make this screen and slides bigger for you. Okay, well, welcome to this rather different webinar from what I have normally done in the past. For those of you who have joined one of my webinars before, for those of you who haven't, my name's Richard Lowe. I'm the CEO of Turn-Keyinvestments, and I'm delighted to welcome my guest speakers today, Merrick Green, the Business Development Manager of Smart Currency Exchange, and David Whittle, the Director of Orbinvest. They're going to be speaking in just a moment, but just to give you a brief overview, the reason why we decided to do this webinar is that, for those of you who do know me, I'm probably more known for real estate related investments, but when investing in overseas investments, of which I spend pretty much all of my time on, there's almost certainly going to be a cross-border transaction between currencies. And one of the value adds I felt would be to provide an alternative to sending your money via the banks. And in this case, showcasing and sharing about smart currencies value proposition for anybody that is doing regular remittances overseas and wishes to see the value of what smart currency exchange can do over and above, particularly banks and even some other certain platforms as well. And why FX bond? Well, I appreciate that real estate is just one asset class, and in a balanced investment portfolio, having a balance between the various asset classes is key for diversification, and that's just one simple strategy for diversifying risk. And so as an alternative tonight, David will be walking you through an FX bond and his company and how the bond works, so that if you wish to look at some more diversification, certainly out of the asset class that I'm most known for, this is the opportunity to learn some more. Now, if you have any questions, please, by all means, feel free to put questions into the chat box. You should be able to see the chat box towards the bottom right-hand side of your screen, albeit your settings might have put the chat box in a different place, but hopefully you can find that chat box and put those questions in. So once we've finished both the presentations, we'll be opening up for questions. You're more than welcome to put questions in as you feel you'd like to, but it might be worth just making a mental note of them and putting them in at the end in case the speakers cover them during the presentation. And then once we finish the presentations, we'll go into the Q&A. So hopefully, we will be taking no more than about an hour of your time tonight. So thank you again for giving us your time. I'm now going to hand over to Merrick Green from Smart Currency Exchange. So over to you, Merrick.
Hi, thank you, Richard, and good to meet you all. It's a pleasure to be on the webinar today. Coming to you live from sunny old London. And I thought just briefly I'd give you a very quick overview of myself and where I've come from in this industry. So I started in this industry around 10 years ago working for Bank of America, subsequently worked at other specialist brokerages involved with currency for both private and corporate client. So that's me. If you would just move the slide on, I'll tell you a little bit about smart currency and who we are and our relationship with Richard. So we're probably one of the largest independently owned currency specialists in the UK and Europe. So there's a lot of text on the screen, but I just want to highlight a couple of things here. Basically, ultimately, last year we did around £2.3 billion worth of currency transactions. And I think that was over around 12,000 independent private clients. We're highly rated and, of course, regulated by the Financial Conduct Authority here in the UK. 120 plus staff, and we're often seen as the trusted voice in international payments. Now, I'll come on to that later in the presentation. If you just put the slides next, and I'll just tell you what we're going to do about this presentation here today. So, again, as I said, what is a smart currency and what do we actually do? And ultimately, we are here as any other specialist. We help people convert currency from one into another and then complete an onward payment bank to bank, whether that's sending or receiving. It's not always just in pounds. Obviously, we complete transactions in other currencies as well. I'll come on to that later. But I think the key part here, and this is what we'll stress as we go through this presentation, is looking at identifying and educating and then minimizing currency risk within a transaction. And that's the key part of this presentation today. So we'll look at the currency markets briefly. We won't go into too much depth, but we'll look at the past, now, and potentially looking at the future. And then wrap that in, as Richard says, ultimately the title of this webinar, how to make money, but importantly, how to save money. And we'll look at that from a view of risk management, wrapped up into a case study about UK property. So here we go. Let's take a look at Singapore dollars and pound dollars. So if you move on to our graphs, for the 5-year period, we've seen a volatility of around 20% when we're comparing pounds into Singapore dollars. And volatility in foreign exchange is the norm. I think David will probably touch a bit more about this within his session, but it always strikes me, you look at stock markets, you look at bond markets, and you compare that to currency. I mean, simply in the last 5 years alone, obviously you can see a relatively stable or at least range-bound approach. And then, of course, things went a little away here in the UK, and that's where we've seen the pound drop off and then some can move back. If you are looking at UK property, then yes, the pound has increased in value since the darkest days of our Liz Truss debacle in November, October. So maybe not in as quite a good a position as you might have been. However, if you're looking at that 5-year view, you're still under the 0% mark, so roughly looking at 4% lower. So even if you are looking at buying UK property now, you're still at an advantage. You move across to the 1-year view, and if we go a little bit more closer, yes, as I said, we have moved from that low, which we saw, and a lot of these markets track against the US dollar. So could you argue, is this a Singapore economic reason as to why that the Singapore dollar is falling against the pound, or maybe it's actually more to do with the pound and what's happening with the dollar? I'll take a look at that in a minute, but just to give you some numbers, the 1-year volatility is 13%, with a high of around 73.70 and a low of 53.66. Just to put that into context, if you were looking to buy or even sell £500,000 against Singapore dollars, you're looking at a flux of around 100,000 Singapore dollars. And so whilst we talk about saving money, really what we want to look at is how to protect ourselves against losing money. And that we'll look at as to how we can do that as we move through this presentation. You move the slide forward. What's affecting the pound, what's affecting the dollar, what's affecting any of the currency markets at the moment, you can probably bring it up into 3 cohorts. Fundamentally, inflation. Inflation has remained stubbornly high in the UK, although it has begun to start to move lower. It's a common theme across Europe. It's a common theme across the US. However, in the UK, it has certainly been a lot more sticky. That feeds into interest rate differentials. And so as the interest rate, the base interest rate of the home currency increases, i.e. to combat inflation, therefore you would expect the currency to increase in value alongside that interest rate. But of course, the same things are happening across UK, Europe, US, and the rest of the world. And so we start to see this push and pull, which it almost comes down to the fact that, well, actually, are we looking at the expectations of interest rate differentials and where do we see ourselves moving forwards versus other economies and other currencies and central banks globally? And that's where we start to see flux and trend over time. Of course, the other impact here, particularly in Europe, is geopolitical risk. We put that forward and have a look at the next slide. There's many different things which feed into this. Let's go back one quickly. Many different things which feed into this. And this is an extract from Smart Currency's quarterly forecast. We produce a quarterly forecast of all the major banks' predictions over the coming 3 months, and we highlight which events could impact, which could create volatility. The reality is, if we look at what those forecasts are on the next slide, and this is against the US dollar, who knows, is what we're showing here. The reality is, currency markets are unpredictable and relatively hard to predict, and therefore you can put trends in it. But really what we're saying here is if the banks don't know, how does a retail or individual investor know? And so if you look at this and quantify it, £500,000 against US dollars, the banks are forecasting plus or minus 120,000 US dollars differential. So if we put that forward, if there are interest here, obviously, as I said, we produce quarterly forecasts, other educational material, which if you contact Richard, he'll be able to pass it on to you. I'll provide it to him after this session. So where are we with this message? So as I said, one of the key things that I want you to take away from is that currency is volatile, and that if you are making an investment or a high value asset purchase or even a sale, then it's something which we need to be prepared for, and also importantly, have a conversation about. So we're going to wrap up what a currency specialist like Smart can do and intertwine it with a property purchase and show you some of the ways that we can help. Very, very easy infographic here to demonstrate what we do versus the competitors. So most of you will be comfortable if you have made a payment before using your banks. Others may use online platforms such as Wise. I think the key takeaway here is if it's a high value transaction, then ultimately you should be seeking some kind of guidance, having a conversation, because yes, we make payments. Yes, there's improved pricing around competitive exchange rates, which can yield a saving on a transactional level. But the key part is understanding your risk and then bringing the right products in to mitigate said risk. So I'll come on to a minute. But the key part here is around having a conversation, understanding what you're looking to do, understanding the volatility of this and what that might mean for your budget and subsequently your own back pocket. So if you have a look at what we then move this slide forward for me, please. How does it work in practice? Well, just like any other money transfer platform or brokerage or specialist, we complete a conversion bank to bank. Dollars come in to your smart currency account, pounds go back out again. We can make payments to third parties on your behalf if you don't have a UK account yet, and it works in both directions. I think the key thing here is that everything that we do is upfront for free, no cost, no obligation. So even if clients come to us and say, I want guidance on this, I want to understand what the implications are of purchasing this property in over a 2-year period, particularly if it's a new build, what that means in terms of volatility and ultimately my cost in Singapore dollars. And that's a really good question. So if you put to the next slide, put the next slide over for me, please.
Sorry,
Is that check?
let me just see. Is that correct?
There we go. Yep, bang on the money. So, and this is a question which we always ask. Would you buy a property without knowing its final cost? And that's a really powerful question, because the reality is when there's a cross-border currency involved, a cross-border transaction involved where the currencies fluctuate, the reality is that you are potentially, if you're not doing it correctly, buying an asset, purchasing a property, making an investment decision with unquantifiable risk, an open-ended risk on that, which if you want to take risks, as David will talk to you about in more detail, potentially that has advantages. But when we're making an asset purchase, such as a property, unquantifiable risk could potentially be dangerous. And another question there, what would a 10-20% drop in monthly income mean if you're taking rental income, or if you're taking a dividend from that and returning that back to Singapore? And what would that mean for you? So here's what we do. If you move to the next slide, remember that graph there looking at that risk of 1 year, 13% volatility. Here's what we'll do. We'll apply a property purchase against that. So if you move the slide forward for you, Richard. What I've done is I've potentially looked at buying £500,000 of UK property over a time period. Let's say we bought that property in February, it would cost X. If you bought it in March, it would cost Y. And again, if you bought that in June, it would cost, or July, it would cost X. And as the pound has strengthened, obviously the cost of that property in Singapore dollars has increased. And you look at the variance of around just short of 70,000 Singapore dollars in that short period. That's around 5 months. And so this is when we talk about buying property or buying a property without knowing its final cost, and could, or what would the financial implications mean if we need to find an additional $70,000 to purchase that property, particularly if you're looking at a new build or there's a time delay between paying deposits and then upon completion. These longer projects can have serious implications when currency volatility is left unchecked. So how do we begin to to deal with this. Richard, if you put us to the next slide. There's a number of different ways to mitigate or minimize currency risk. And often we will combine a number of different solutions for a client depending on what they need from us. A forward contract is something which is not readily available at banks. And so it's a real added advantage of coming to a currency specialist. Essentially, you can lock in today's rate for future delivery, anything up to 2 years. So if you have future payments to make and the exchange rate right now makes sense for you and it makes sense for your budget, then why risk a 10% swing plus or minus? Yes, it could go in the right direction for you, but equally it could go in the wrong direction. And what would be worse? There are other products such as targeting rates using limit orders, stop losses, and so forth. And also we speak to clients around averaging in, i.e., why make the payment today in one full go when you've got a time period of 3 months to complete this payment? Maybe we should break this into tranches and therefore smooth out some of those peaks and troughs. And the key part about this is going back to somebody and having a conversation. As I said at the beginning, our real advantage is to be able to pick up the phone, speak to somebody, have a consultation for free, go through what different products might be suitable for you and in what proportionality of those products. We put the next slide across. I've then used in this example a forward contract, i.e. I've taken the rate in February and I've bought £500,000 worth from Singapore dollars in the future and actually marked those points that I also referenced earlier across the graph just to really hone in on the power of a forward. It protects you from upside risk, downside risk, sorry, but also it means that you're set, your budget is set, you know exactly how much this property is going to cost you. You can also then forecast your rate of return. You can also forecast if you need financing and so forth. Everything is set in stone. There's no ambiguity. And that's the real power of budgeting using forwards. Move the slide on, please. If you need to make a payment today, then of course we can help you with competitive rates guaranteed by a specialist regulated by the FCA. And as I said, whilst we do have an online platform where we do have a mobile app for smaller payments, the beauty in using our service is a voice brokerage. Pick up the phone, speak to your personal account manager, have a conversation. Even if it's to say, well, look, we've got Bank of England, we've got ECB, we've got unemployment figures from the United States, or whatever it might be coming up in the next 2 weeks. Should I be holding off? Or what does this mean for me in the near term? Have those kind of conversations. And then just like any other specialist or any other money transfer platform, money moves through and gets paid out to the UK bank. Nice and simple. If, however, you already have assets in the UK that you're making money from, that you're taking a dividend from, or maybe it's a rental income, it could be a pension, it could be anything, then of course this service works in both directions. And if you move the slide on, we have a lovely little product called a regular payment plan, which ultimately automates on a monthly or quarterly fixed basis a pound outbound transaction into another currency. So if you're taking a monthly rental income or a monthly dividend and you wish £1,000 to land in your Singapore dollar account every month on the date, then that's really, really simple, really easy. You set it up from day one and off it goes. No more interaction from yourself. It's more of a convenience, peace of mind, and potentially might save you a bit on your bank fees if you're banking with a UK bank, for instance. Also, you can lock in that rate using a forward for budget security. So that's a whistle-stop tour of smart currency. And I think the key part here is speak to somebody, understand that your plans, look at the risk, quantify the risk, and see if there are ways that you can mitigate and minimize that risk. That's it from me.
Great. Well, thank you very much, Merrick. And let me just add to that, because I have a real personal experience that went against me in 1997. For those of you who remember that, was the Asian currency crisis, and I basically reserved a property in September 1997 in the UK, but the actual completion of that property didn't take place until about November. And within those 2 months, the currency swung something like 10 to 15% against me. And had I known about something like smart currency back in that time, or just thinking about, well, where is the exchange rate now and where could it go? The examples that you've just given, America, I think are very powerful, because at the end of the day, you can have that peace of mind to lock in exactly the exchange rate if you feel now is a competitive time, or at least know that even if it goes the other way, you can budget for it rather than being at the mercy of the markets that can suddenly move, especially if some major political issue goes on. So thank you very much, Merrick. For those people that are interested to open up an account, you should see very soon, if it's not there already, in the chat box, a link that will take you to a landing page. Very simple to register your interest in opening an account with Smart Currency Exchange, and you're more than welcome to do that now or at a later date. You might want to just copy and paste that link, and so you can register and open up an account. As Merrick's already mentioned, there's no obligation, but there's a lot of value add over and above using definitely a traditional bank. So I hope that's opened up people's eyes and thoughts to, potentially lowering your risk and potentially saving quite a lot of money if you're doing a large transaction, but also smoothing things out if you're doing regular transactions as well. Okay, so let's move on to the second half of the webinar tonight. And so let me hand you over to David Whittle from Orb Invest, who's going to share more about the FX bond. So over to you, David.
Thank you, Richard. Thank you very much. And thank you, Merrick. Very insightful overview in terms of what you guys do. Hello, good evening, everybody. I, like Merrick, am also in a very, very warm and sunny London today. So it's great to be here with you all this evening, your time. If we could please move to the next slide, Richard. Thank you. So by way of an introduction, Orb Invest work as an introducer and marketing company within the alternative investment market. The company was launched with a goal of, I suppose, leveling out the playing field for qualified and retail and professional clients to enable them to have access to investment opportunities which have traditionally been reserved for those of an institutional status. What we do is work alongside our clients' established portfolios and simply provide them with the opportunity to explore products that fall within the alternative investment market with hands-off and fixed income offerings. Our aim is to work with our clients indefinitely, working towards our clients' financial goals, assisting them in growing their wealth, and by delivering double-digit returns on the products that we offer on an annual basis. We work across multiple sectors, and I suppose what we want to do is give our clients the ability to diversify their portfolios away from traditional asset classes. Now, what I'm going to talk about today is by no means financial advice, and I need to make clear that the investments that we work with are only available to investors who meet certain net worth or sophistication criteria. So investing is paramount of importance due to its potential to unlock financial growth and security for individuals. Investments offer a means to accumulate wealth, build passive income streams, and fund future goals. They also serve as a hedge against inflation and contribute significantly to retirement planning as well. By embracing a long-term investment mindset and understanding the inherent risks involved, individuals can leverage investments as a very powerful tool to enhance their financial well-being, expand their own personal opportunities, and secure a prosperous future for themselves. In today's very dynamic economic landscape, investing has become increasingly crucial for everybody. And while the concept of investing may seem intimidating to some, understanding its significance is absolutely vital for long-term financial growth and security. And there's a number of reasons why making investments are essential. Wealth accumulation and financial growth, building passive income streams, funding future goals, mitigating against inflation risks, retirement planning, and financial security. Now, in the past, So can we just go back one slide? You're one step ahead of me, Richard.
All right.
In the past, alternative investments were traditionally reserved for the domains of institutional and corporate investors who would see double-digit returns on an annual basis, absolutely no problem at all. But in recent years, the alternative investment sort of sector and asset class have grown in popularity and are making their way into the portfolios of pretty much all traditional investors. Alternative investments tend not to be correlated to the performance of the conventional markets, and a lot of the offerings within this sector provide the opportunity for substantially higher returns with reduced liquidity. Some do carry high minimum entry levels and might not be available to all investors, and a lot of them do carry the classification of a high-risk investments. But what they can provide is a lucrative opportunity for investors. It provides the opportunity to diversify portfolios away from traditional asset classes, dampen the impact of market volatility, and help achieve those long-term investment objectives, even during times of market uncertainty. Some key reasons why our clients and a lot of individuals are focusing on the alternative investment market: portfolio diversification, enhanced returns, risk management, less market dependence, portfolio customization, the low correlation with public markets, and an inflation hedge. If we can move on to the next slide, please, Richard. Portfolio diversification is a very interesting topic at the moment. It is something which we are discussing with every single one of our prospective clients. It's a strategy that involves spreading your investments across different types of assets or securities to reduce risk and potentially enhance returns. The idea behind diversification is to avoid putting all of your eggs in one basket, as different asset classes tend to have varying levels of risk and return potential. And by diversifying your portfolio, what you're effectively doing is aiming to minimize the impact of poor performance in any one investment or the overall performance of your portfolio. Many investors have done very well in building a portfolio and focus on the traditional asset classes over the years. But a lot of individuals have also seen a significant impact on their returns over the course of the last 4 to 5 years. A lot of people see that diversifying portfolios gives traditional investors the opportunity to have a risk reduction within their portfolio. They're able to minimize volatility, they're able to enhance their return potential, capture different market conditions, provide themselves with an averaged longer term stability, have liquidity management, also look at their behavioral benefits, customize their portfolio, and also give themselves a global exposure. The risk-reward relationship is a fundamental concept in finance and economics, and it's important for investors to understand this relationship that they have and their levels of risk tolerance when making investments. Risk is inherent when investing, and whilst portfolio diversification can help manage risk, it is impossible to remove it completely. And it's important to make sure that your investments remain aligned with your goals and risk tolerance. Taking a strategic approach to diversification, investment selection, and monitoring will certainly help mitigate risk and increase the likelihood of achieving your financial goals over the period of time that you're investing for. If we can move to the next slide, please, Richard. So what we've ultimately done at Orb Invest is we've worked with a regulated fund that we are working very closely with, and we've created a product called 4x50. Our whole principle for this is to provide our clients with a fixed income bond, but not in the traditional format where clients are tied into an investment for a period of time of 4, 5, 6, 7, 8 years. We want to provide our clients to have full flexibility. So we've structured this in a way where it can provide a short-term investment opportunity or a longer-term investment opportunity, where it can also give clients an annual or a quarterly return. So the product is a £50,000 minimum entry level and provides a 15% fixed return per annum which can be paid on an annual basis if someone's looking at growing and compounding their returns, or on a quarterly basis if you're looking at an income investment. The period of time that the bond is fixed for is just 12 months, and all clients have the option to resubscribe at the start of the rollover of each new year. The funds are invested into a regulated fund, who I'll go into a little bit more detail shortly, and we charge no entry or management fees. We've looked at all of the platforms where people would typically invest into bonds and Forex and these types of asset classes. And what people don't like is that you may get, for example, 10%, but when you deduct the entry fees, the management fees, the performance fees, what your net figure and what you're left with at the end of that is significantly less. How our investments work are very, very simple. The client gets 15% return on an annual basis. Anything over that 15% is how the fund and all the people involved then make their money. Returns can be made in rising and falling markets, which is pretty unique. We're not just dependent on performance within the Forex market going in an upwards curve. The fund that we work with specialize in the development of algorithmic trading strategies, and they then apply these to the Forex market and trade these strategies. And they are able to make returns in positive and negative markets. So effectively, it doesn't matter what's going on. As long as there's volatility in the markets, the algorithms can trade and make a profit. There's naturally elements of risk with every form of investment, and we've got strong risk mitigation in place. And that's something that we will discuss in a little while. In addition to that, we also work with independent regulated paying agents, and that's how we work with our clients to fund their investments. If we could go to the next slide, please, Richard. So our fund manager, we work, as I mentioned earlier, with a regulated fund manager. We are an introducer to them. They've been established since 2015 and are regulated by the Malta Financial Services Authority. They have an administrator in place for Trident Fund Services, a custodian in place who are Swissquote Financial Services, and have an auditor in place being Ernst Young. The fund specializes in the development of algorithmic trading strategies, and they're programmed to monitor different market structures, follow strict predefined risk parameters, and take a balanced approach to generate consistent returns through all market conditions. And they apply these strategies to the Forex market, working with the major currency pairings across the globe. The fund are also classified as a UCITS SICAV fund, which is a global standard in security, liquidity, oversight, and regulation. The fund manager's risk mitigation. So we have 8 strategies in place currently live. We actually have 2 more strategies which will be going live with the fund, which as of the start of this month, so that will take it up to 10. Each strategy has its own independent kill switch. So, for example, they're predefined to work to certain protocols. Should they be in a position where something would happen in the markets that it wasn't expecting or predefined, what would happen is a signal would be alerted to the human trading team, and they would then be in a position whereby either the hard stop would be exited or the human oversight team would exit the positions. There's a 10% hard stop on the entire portfolio. And we've also got the human oversight for the trading team within the fund as well. And being regulated, they have to work within certain security structures and risk controls. These algorithms are working in a living and breathing market, so there is continuous optimizing. They're constantly evolving the algorithms and the strategies to ensure that they're operating at peak performance. And to give you an idea of speed of execution, a human trader would be able to sit and monitor maybe 1, 2, if they're very good at a push 3 screens of graphs. And by the time they actually move from brain function to mouse and executing a trade, there will be quite a significant change in price. What the algorithms are able to do is execute in excess of 15, 20,000 trades within a billionth of a second, and they're then able to exit those within a couple of billionths of a second later. So we really are working at speed of execution and making sure that we are getting the best possible trades available. A lot of people will ask why Malta, and that's something that I think is important to cover. Malta is a full European Union and Commonwealth member and an internationally recognized financial services centre. There are a number of benefits that Malta has to offer. It's got an English law principle-based business legislation. It's got economic, political and social stability, transparency and good corporate governance, and it hosts over 580 investment funds with a combined net asset value of almost £10 billion, with the addition of 70 double taxation agreements in place with other countries, including the UK and the US. If we can move on to the next slide, please, Richard. So, year to date, up until the end of July, so we received the performance figures from the fund between the 15th and the 18th of the following month, so we are awaiting August's return. But up until the end of July, the fund have achieved a total return this year of 24.88%. Now, what's interesting about the graph that's in front of you is it shows the correlation between the MSCI World and the S&P 500. And you can see how consistent the returns are that the fund are able to achieve throughout the COVID pandemic, 2020, 21, and also throughout the period of 2022, where we had the invasion of Russia and Ukraine, and how a lot of markets actually saw high levels of impact and significant losses during that period. The fund's performance saw a gradual increase in an upwards curve, and we gradually pulled away from those other markets, which is fantastic to see. If we can move on to the next slide, please. Now you'll see in here a breakdown from 2019 to 2023. Whilst the fund had been established since 2015, I've only gone back to 2019 from a reports perspective. Further information can be shared if requested. You'll also note that July is blank, and I've left that blank deliberately as a standout point to have a discussion today. The fund do not force trades. They're in a very positive and strong position right now where coupon payments are effectively covered on the current return per annum, and the fund are in profit. So they don't force any type of trade. During the month of July, it's holiday season, and there were a lot of indicators that there were going to be huge announcements coming out of the US. So there was a low liquidity expectation. When that happens, it indicates that there's going to be some unreliable functions within the markets, and things become a little bit harder to predict, and that means that the trading risk is significantly higher and perhaps won't be favorable. The news that came out was from an economic perspective in the USA, and the decision was taken to actually not trade at all during the month of July, which actually proved to be a sensible approach, because the high impact economic news from the US saw the US pairs take extensive moves, which I'm sure will be shared with Merrick. And we saw moves that have rarely been seen before, over 300 pip moves in GBP USD alone, which ultimately, if you were to look at a graph, it was like a straight line over 3 days on the back of the data releases. And for a lot of unsuspecting traders, it really did release a bloodbath. So the fact that the fund are in a position where they won't force anything is another element of the risk mitigation, which is fantastic. Looking forwards towards the rest of the year, we await the results from August, but 2023, we're in a position where we're looking at seeing returns in excess of sort of 50 up to maybe 60%, which would be fantastic. What that means for our clients once they are on board is, yes, obviously the fund have done their job in terms of generating the returns for the return on investment for the clients, but it also means that there'll be further funding available, as we've seen this year, for further algorithmic trading strategies to be developed, tested, and then implemented into the trading portfolios moving forwards as well. That's all from me in terms of an overview. I think, Richard, we're going to go into some Q&A sessions now.
Great. Well, lovely. Thank you very much there, David. Very interesting, fascinating, and obviously closely dovetails with what Merrick was involved with as well. So what I'd like to do now is encourage people to go into the chat box and place questions there. We'll do our best to answer those questions and have a more of a panel discussion now. I'm just going to have a quick look, see if there's any questions put in. So, okay, let me just see. Okay, so no questions just yet. You will see that in the chat box, my colleague has put in a link to the Smart Currency Exchange. If you wish to go to download into the landing page, if you're interested to open an account with Smart Currency Exchange. So, okay, I can start to see questions are coming in now. So it looks like the first question for Merrick. What does Smart Currency have to do with Orb Invest? Maybe it isn't. Okay. Well, there's an FX link, but I think there's no shareholding. What I've done for tonight's presentation, if you weren't here at the beginning, was I primarily have worked in real estate, and whenever you're doing a cross-border transaction and investing in an overseas property or an overseas product, you're going to have a foreign exchange transaction going on, and Smart Currency Exchange offer a really good platform that provides a lot of value add, and account manager to help you make maybe more informed decisions. David and Orb Invest, basically a completely different company, but obviously very closely related to FX as an FX bond. And so there was a connection between the two. And so I thought I'd bring both parties together for tonight's webinar. So guys, anything else to add to that?
I think it's a nice link because Smart Currency enables clients to physically make or receive payments and also manage fluctuating currency risk in those underlying transactions. Whereas as David is looking at something different. I mean, I'll allow you, David, to give.
Yeah, I mean, ultimately, what we're looking at doing is enabling clients, I suppose, who don't have the experience or the time or want to risk, going into dipping their toes into something where they don't know what they're doing on trading platforms or in self-trading, and having the opportunity to work with a regulated fund, but locking their funds away for a period of 12 months at a time, going into a bond. That's ultimately what we're doing, and that then couples with our whole message of being in a position whereby clients come on board, diversify your portfolio, have a number of different plates spinning for you. We can assist you in growing your wealth within the protected structure of the regulated fund, and being in a position whereby you've got income streams coming from a number of different places. It then doesn't matter if where you've got your funds aren't necessarily performing, or if you're used to seeing 5, 6, 7% in one area and you're down to 3 or 4%, you've got the other asset classes which are then consistently performing for you as well. I've seen a couple of questions that have actually come in here. There was a question for you, Merrick. How long can I lock in rates for?
Yep, I'll take that one because there's some really good questions incoming for you then as well afterwards. So yeah, I think as a payments company, we're not here to help with investments or speculation. That's not what we do. We are here just to simply complete those payments in the best manner for you and what you're trying to achieve, i.e. if you're buying a property, for instance, or maybe you're moving wealth from one area to another and there's a payment required. In terms of the risk management piece, it is very much a conversation with a personal account manager. There's no additional charges for that. It's part of what we do. And in terms of how long you can lock those rates in for, most clients tend to lock in for 12 months, but it really does depend on what you're doing. We can go as far out as 2 years, but some clients, it may well be that they only need to lock in for 3 months. Other clients need to lock in for 30 days. I have a client right at the moment who is looking at disinvesting from a dollar investment to reinvest in a pound sterling investment. And there's a lag time of 30 days between those investments being sold and cash being liquid, ready to move. And so we're looking at a strategy to lock in just for 30 days to mitigate the currency risk between cashing one investment in and funding the next. So again, it is down to that conversation with your account manager to say, I'm buying a property, or I'm doing this, or I'm doing Y. and what's the timescales, when are the payment deadlines, because it might well be, again, looking at a new build, if you've got 12 months, but there's a series of payment deadlines at 3 months, 6 and 9, then actually you could place a forward across all of those dates. So it's dependent on that.
Great. Lovely. Thank you.
I can see there's a couple in there for me, Richard.
Yes,
Shall I
yes.
go ahead and answer them? LYW, must the funds for any investment for Orb Invest come from the UK or overseas? We can accept any currency. One of the regulated paying agents that we work with can do a conversion, but obviously Merit comes into place here as well. And that's kind of where the synergy is in answer to one of the other questions as well. If you wanted to open an account with Merit could then work, I suppose, as a kind of transfer paying agent to fund the investment for an individual client. So, yeah, it can be converted, or we can accept funds from clients in any jurisdiction. Clients can also onboard in their own personal names. They can do it within a limited company. They can do it in spouses' names as well. So whatever works best for you. Returns are paid out in the form of an income in a coupon. So very similar to that of a property investment when you're getting rental income. So yes, you would be liable to tax, but I'm by no means a tax advisor, so you need to seek your own independent advice on that, and someone who can obviously have eyes on your personal situation. And there's also a question in there as well: what's the difference between returns being paid quarterly or annually? It's effectively income and growth. So for a client who's perhaps looking at growing their portfolio over the course of the next 5-10 years, they could take annual returns and compound that on an annual basis, not take any income and just roll the returns that they see every 12 months into the next 12-month subscription at a time. The quarterly obviously comes out as an income, and clients will be paid that out every 3 months. The only difference on the annualized side of things is that the returns can be compounded. So rather than seeing the return of 15%, whatever the prevailing rate is at the time, you'll get a slightly increase on that. I think at the moment it's about 1.2%. So if you're compounding it on an annual basis, you'll see 16 point something percent. If you're taking it on a quarterly basis, we can't compound it, obviously. And yeah, we'd be paying out 15%. There's another one that comes in: if the fund is located in Malta, why is the fund subject to UK tax? So the fund's located in Malta. The bond issuer of the product is located in the UK, and the bond is facilitated and managed within the UK, hence the reason why it'd be subject to UK tax.
If I can just interject there as well, David, quite a few of the callers today will know that I've been involved with property bonds. And again, I can't give tax advice. Each person is specific. But in terms of coupon payments, those people that are Singapore residents were not subject to UK tax, and interest as an income here in Singapore, I believe, is not taxable as well. So if the same things were to be applicable for this kind of payment, I mean, it's a similar coupon payment paid either on a quarterly or annual basis, it may well be that, you know, the same thing applies. Yeah, so for property purchase, I think it's an NRL form that they have to complete, non-residential landlord, and provide that to the government or to HMRC. They would probably just have to go down the same sort of route from that perspective, which would then obviously put them in a position where it'd be identical situation to that of a property purchase. Yeah, good. Okay, I don't see any more questions in at the moment. Please do put them in. Okay, one more's just come in. Can you pay income to Singapore?
I presume that's probably for both of us, Merrick. From my side on the bond, on the Forex bond, yes, payments can go out to Singapore. That's absolutely no problem at all. Likewise, and this is where Merrick ties in, if you wanted smart currencies to kind of collate that and pay that out, then we could obviously make an arrangement with them for that process to happen. But paying out to Singapore will be absolutely no problem at all. Okay, one more from Irfan. Thanks for joining, Irfan. For Orb Invest, is it solely invested in FX trading, or are there other asset classes? So we work with different asset classes, but the bond for the Forex 50, that is specifically for the Forex market. So those funds would be used to be traded within the Forex market and only the Forex market.
Sure. Thank you. Okay, Roy. Good to see you, Roy. Let's see, was that a question? Interested on the hedging front, and we'll reconnect. Okay, thanks, thanks, Roy, for joining. Joe, good to see you again. I'm not sure if you're back in Asia. Joe's asking, this is not a guaranteed bond. So what is the risk of the fund compared with corporate bonds? Good question.
Yeah, so it's not guaranteed. If you were to look at the collateral, which I think some collateral headline documents will be circulated with everybody, the alternative investment market, we need to have the slogan of this is a high risk investment, riskier than your savings account, and you could lose all funds invested in this. Similar to what you see on all of the advertisements these days. The risk of the fund is effectively trading risk. So we've got the administrator that's in place who obviously administer everything that's happening within the fund. We've got the custodian in place as well. And ultimately, they're in place for client security to ensure that the processes are in place to control the flow of funds. The funds are being used for what they need to be. The figures being reported are true and accurate. As I mentioned earlier, the fund have a 10% hard stop on their portfolio. And that's a maximum hard stop. A lot of the time, they only get to around about 3 or 4% in terms of the risk exposure that they'll give themselves. So that is ultimately the kind of biggest exposure that you would have from a trade perspective. But it does have a high risk investment label attached to it.
Great. I mean, it is at the end of the day, it is a fixed income, so they're going into an agreement with a 15% annualized return.
Correct.
But there's no guarantee, of course.
Correct. Yeah. With the regulations surrounding the fund and the alternative investment market, etc. Obviously, we have to ensure that we've got the necessary risk warnings that are in place, and we don't use language such as guarantee, because nothing in life can be guaranteed. The price of something can go up and down and left and right.
Good. Okay. Any last questions? We're coming up nearly, I think, to 9 o'clock Singapore time, so we're just sort of nice. Just see if there's any more questions coming in. If not, any last comments from our speakers, Merrick and David?
No, it's been a pleasure. Hopefully we can connect with some of the individuals who are on the call today. We're certainly available to follow up, have initial calls, discuss existing portfolios, what you're looking at achieving moving forward, and how we can potentially fit into that, and also send some further information over to you as well.
Yep, similarly, it's been a pleasure. And also you have the link there if anybody wishes to open up a free account and have a conversation with a trader. By all means, again, it's free, no obligation to have those conversations. It's a piece of admin that we get everybody to do because we're FCA regulated. But I will also send over some collateral to Richard, which again, he can then forward out to everybody with further information. And any other questions, then by all means, you've got my details, you've got Richard's details. Happy to have those conversations.
Lovely. All right. Well, thank you very much, Merrick and David. And just to finish off with, we do record these webinars so that if you have any friends or family that weren't able to join today, we'd be more than happy to send you a recording. And certainly what we'll do to follow up with this is send out some additional literature with the services and the products that Merrick and David provide at their companies, so that you can, again, just have some materials to read through. And I'd be delighted then, to follow up with people, whether that be individually, have a chat. If you're based here in Singapore, be delighted to meet up and go into more detail if you'd like to discuss either of these particular products. So thank you very much for attending. I have just put the Smart Currency Exchange link. So again, it is there if you came in a little bit later. I won't stop the call immediately. So again, you have time just to cut and paste that link if you wish. But we will be finishing off. So thank you very much again for our guest speakers, David and Merrick. And we'll look forward to seeing you again at some stage in the near future. We do lots of regular educational seminars and webinars around the real estate and investment world. And this has been a first. So thank you and good night.
Pleasure.
Good night.